On today's show, 3 questions. Number 1, are you ready for some economic data? Number 2, the deadline passed, now what? And number 3, do you still need TSA PreCheck? Let's go. Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Rabih.
Yeah, you are, Rabih. How are
What's
you?
up? I'm good. How are you?
You feeling good? You feel chipper today.
I got like 9.5 hours of sleep. That always helps.
Oh my God. You get so
My
much
Whoop
sleep.
score is so high.
Is it off the charts right now?
Yeah, I'm in the green.
Heck yeah. I've been battling in the yellow, trying to keep that green up. Sleep, I've found that sleep, it truly is the key. So I'm getting a lot of comments, by the way, like in emails and things about our Whoop, us talking about Whoop.
Both positive and negative, I assume.
Mostly positive from clients and just dentists out there. I actually had a dentist who's not a client reach out and made a comment, just emailed me about the Whoop. The negative comments come from our marketing team.
Yep.
They hate that we talk about the Whoop so much. Well, sorry, Michelle, Becky, and Studi, we love you, but we're going to keep talking about the Whoop. So let's jump in. Rabih, are you ready for some economic data? I know there's a lot going on. Let's hit it.
It was a busy week, which means it was a very fun week for me. But we got lots of data coming in. We got GDP data. We had the Fed meeting. We got job openings data, and we got unemployment data. All of that in a 1 week. I know it's kind of like
cornucopia of economic data for Rabih. He's just so excited about it.
I love it. It's like a refresh, like now it's when you buy, I don't know, new furniture. Like everything is new. You've got new stuff and you can look at them. That's how my brain works.
I love that that's what you likened it to. It's like getting new furniture. Economic data a week like this is like getting new furniture. I love this.
It's like you get new unemployment numbers and it's like the smell of a new car, like
only you are literally, you and maybe Jerome Powell are the only people that can say that. But I love that. And I love that you just said that. Smells like economic data, just like a new Mercedes-Benz.
Exactly. Let me take you for a drive.
Oh, there we go. Oh my gosh. Rabih is on fire. Okay, let's go.
It's the sleep, Matt. It's the sleep.
You are. Holy cow. Thank you, Whoop.
So we had the Federal Reserve meet this week, and they decided not to cut interest rates, right? It was expected, although the president tried to, push some influence by visiting the Fed. They said that the economy is still in a really good position, and their position for not cutting interest rates puts them, at a pivot point where they can react either way, whether inflation comes from tariffs or not. Something that was very interesting that from the whole conference call that was mentioned is that the GDP data is coming strong. This week, we got GDP for Q2 and they annualize it. So they multiply it by 4. And the expectation for Q2 GDP 2025 was that we will grow at 2.5% annualized, coming off a negative 0.5 in Q1, right? Q2 came in at 3%, not 2.5%. So beating expectations, but not just by 0.1%, by like a full half percentage point, which is significant. However, Jerome Powell actually said something insightful because there is volatility. You're moving from negative 0.5 to 3 all at once. It was like, instead of looking at it quarter by quarter, look at it for first half of this year and compare it for the first half of last year. For the first half of this year, negative 0.5 and 3, we have grown at an annualized 1.25%. That is what he's saying. However, if you look at the first 6 months of last year, we grew at annualized 2.5%. So probably around double the speed of growth. So he's saying that we are seeing that the economy is slowing down. This is what it is. It's not negative, but it is much lower than it was in 2024. However, unemployment hasn't really changed from last year till this year. So this is where we stand. And he said, since inflation is still a little bit up above our 2% target, maybe we just stay put to this meeting.
Shocker. It was like the most unshocking thing. Everyone kind of knew he was going to keep.
100% everyone's going to know. And however, the market has been changing their opinions really quick. And I'll get to those numbers in a second. But he said something about inflation. He said inflation has been kind of stagnant, slowing down. However, if you decompose inflation to the goods inflation, which is impacted by tariffs, and the services inflation, which is, what we are spending on with vacations and restaurants and hospitals, etc. Their work has been on eliminating inflation, and the residual inflation that was remaining in the economy was service related. They are still seeing the service inflation going down. However, goods inflation, which kind of disappeared, started coming back with those tariffs. So on the headline above the sea level, we're seeing inflation stagnant. But what is happening is that the services inflation is still going down, aligned with their plan of keeping interest rates high. But goods inflation has been ticking up a little bit due to the tariff impact. So that's why we're seeing it as constant. But there has been changes from within.
And Rabih, can we hit something really quick on this? Because I think I've heard this many times, and we've talked about this difference of like a price increase because of tariffs, let's say, versus actual inflation. Like those are two different things, right? Can you just hit that really quick to like clarify? I think people just think prices go up, that means there's inflation, but that's not always the case, right?
100%. Inflation is the continuous rise in the prices, right? An increase in price level is you're looking at, I don't know, going back to above the wave, looking at the sea level, and it just increased by a couple of feet and it stayed there. That is a price increase. It's a one-time thing. That's it.
So it's very possible the tariffs do that without causing the inflation.
100%. And the Fed is hoping that with their policy of keeping rates as is for this month, that they are a one-time price increase rather than a continuous increase in prices or inflation, aka the sea level keeps getting higher and higher and higher and you can't stop it.
Got it.
So this is what's happening in the Fed's mind, right? And this was the first meeting where the vote to keep interest rates constant was not unanimous. We had two dissenters, and those two dissenters wanted interest rates to be cut this month rather than in September.
Did they say by how much, by the way? Or they just
a quarter?
A quarter. Okay.
Yeah. It's dissent is like a big word. Those are like high caliber economists who are like very respectful to each other and providing proofs for what they're not like tweeting angry stuff at each other.
Wait, who are you talking about?
So
who are you referencing?
I don't know. Elon Musk, Trump. Anyway, so the idea is, I think this is more of like it's easing the possibility that a rate cut is happening in September, because if you move from a unanimous decision of no cut to a unanimous decision of a cut 2 months later, that sounds like this is getting orchestrated rather than it being a product of natural argument between the members of the Federal Reserve Committee. With that, we wanted to see how the market reacted to it. And I got the Fed Funds futures data, which tells us what is the market's expectations about the path of interest rates. And given that the economy is strong until the data that we got today, which I'll talk to you about in a second, we had the market having different probabilities for whether they're going to be seeing a rate cut or they're not. A month ago, they were thinking that by September, 75% chance, yes, we will have a cut. A week ago, they were like probably 60% chance that we're going to have a cut, not 75, because the economy is kind of strong. And then before yesterday, on Wednesday, when the Fed went on and spoke and said, oh, the economy is strong, and this is what we are seeing with inflation, and unemployment didn't change for a year, their probability actually changed to 46% of a cut. So now it's less than 50% there's going to be a cut. Then yesterday, before we got the data for today, this morning, the probability even went down to a 40% or 39% that there's going to be a cut. Given what the Federal Reserve spoke, he communicated to the market that the economy is still running at a good speed, although less than last year. Unemployment hasn't changed, and inflation, if we decompose it, we see a tariff impact. So staying put is good, and maybe we'll have to stay put in September. This was what communicated. Up until yesterday, the market was pricing in probably only a 40% cut. However, this morning, we got unemployment data, and I had to go and find the new data before the podcast because it changed really quickly. And earlier this week, we got job openings. And today, this morning, on Friday, we got the non-farm payrolls and the unemployment rate. Job openings, we were expecting to have around 7.55 million jobs available in the US economy. When we got this data, it actually had dropped to 7.43 thousand. So you're talking about 7.43 million. So you're talking about like 150,000
Less openings.
Openings. I was going to say dollars, just so you know, we work with money the whole time. 150,000 less job openings in the economy than we thought. And in terms of non-farm payrolls, aka how many new people were added to payroll this last month, we were expecting 110,000 people to be added. Only 73,000 people were added, so 25,000 people less. And the unemployment rate, as a result of that, lower supply and lower demand for labor, has ticked up to 4.2%. Not recession territory, not freaking out territory. But now, what the Fed has talked about 2 days ago about unemployment hasn't really changed in a year. Yes, if you compare one data point to another data point, but there's volatility in it, and we saw it this day. So, what do you think the probability that the market is pricing in for a cut in September is now? Yesterday, it was 39%. What do you think it is now? I don't have it in the data.
You don't?
I didn't post it on our comment sheet, but I have it on
Oh,
the
I'm guessing it jumped probably a decent amount. I will say it jumped back to 70-ish%.
It's up to 81% that now
Okay.
they are expecting. So just yesterday, we were expecting,
Like doubled.
yep, only a 39-40% chance that we will have a cut in July. Now we're back up to the 80% probability we're going to have a cut in not July, in September. So this is where the market stands. Equity indices today have dropped like 1.5% to 2% across the major indices. That is normal. That is totally within expectations for such a move to happen. And it was because not only we only had 73,000 jobs added, but the previous month was actually revised a little bit lower. So it is like trying to become more aligned with the new information that we got. Does this mean that now we're on the path of a recession? It's not, but what this means is now we are going to have a month and a half from now till September meeting where we say, oh, should have they cut in July? Should they have not cut in July? What was the right call? But at the end of the day, September is going to come. And beyond the decision over there, we will have a new data and it'll be behind us. Although this is some like many day fluctuations.
Yeah, this will probably just be, I'm guessing, a muted version of what we experienced in like post-COVID when it came to, or I guess in COVID, when it came to the people criticizing the Fed for not moving fast enough on the inflation. I remember back then the term of the day for a while was transitory, right? It was like, is this inflation transitory or is it not? And there was some pretty heavy criticism on the Fed. And I think there's probably remnants of this when Trump references Jay Powell now of why he needs to move faster is because he criticizes him for that. Like, you didn't move fast enough back then. It led to inflation. I think there's an argument to be made for that. There is a legit argument for that they did not move fast enough, that they didn't. I don't blame them. This is a job so far above my pay grade. There's not even words for it. I can't even imagine the complexity they have to deal with. But I think that's probably what was leading to this. And then I'm guessing we're going to have a muted version of that over the next 30 days or so.
Probably. Like the nickname for the Fed chairman has been Too Late Powell.
Yeah.
And
Coined by
guess,
Trump. He loves his nicknames. Yeah.
Yes, by the president. And I understand that there's a risk of the Federal Reserve being late, but it is a risk. But what's the magnitude of it? If you're only a month late on dropping interest rates, does this really derail the largest economy in the world?
No.
That is where I stand. Yeah, they could be late. If the economic data, especially for jobs, keep coming as is for the next month and a half until the meeting, it'll definitely be that they're late. But if you're only late a month, hopefully not a lot of people will be fired by then. But
yeah. Well, and what's the flip side of that? We've talked about this. There's this whole idea of like, this isn't just a linear, like, we're only looking at one side of the coin. The other side of that coin is you do it too early and then rampant inflation kicks back up. Like, I think that's what we've realized, I think at this point over the last 5 years, that inflation is a far bigger, a far worse scenario for pretty much everyone across the board than even is a recession.
economic slowdown.
Yeah, yeah, exactly, like a slowdown. I think what people fear with a recession, and I don't blame them, is I think we still have a little PTSD from 0809, and we always, when we hear recession now, I think adults who have lived through that think, well, a recession immediately equates to 0809 scenario. we can't stress enough that is not true. Like 0809 was
A
of a
once in a
back
lifetime.
once in a lifetime, once in a generation type thing. So a recession or economic slowdown is, although yes, we're empathetic, has impact across the economy and actually impacts people's lives. It just doesn't automatically mean an 0809 scenario.
Yeah, 100%. Actually, just to get you one last bit of, insight from the Fed conference, he said that consumer activity has been slowing down, but in business investments and inventory have been picking up. Consumer activity, I know it's 70% of the economy. It's what supports the economy. It's been slowing down, but inventory and business investments are usually leading indicators of GDP growth. So although they are slowing down, businesses are still investing in a better next year. It's not that they're closing down and halting their activity until the waves passes. They think they can ride it out.
Yeah. Yeah. And let's not be too dramatic here, right? Like we've seen this over the course of the last couple of years. We have one report that indicates, oh, this could be a slowdown. And then like the next report comes out and it's like, whoop, back on track. So the whole point of this is we have to see consistent reporting of a negative nature for us to indicate like, okay, the needle is now pointing down. I don't think this report does that.
No, it just tells you it's not pointing up as much as it was.
Yeah. Yeah. And again, this could bounce back next month all of a sudden.
100%.
So, okay, cool. Anything else, Robbie, on the economic data you want to hit?
No. Did you like the car ride?
I loved the ride. I loved the ride. Feel like I was in a nice Uber comfort drive with you.
Thank you.
We had a great conversation. Let's jump to number 2. The deadline is passed. Now what? Tariffs seem to be back in the news. What's the update there, Robbie?
The update there is, remember in April when we all thought the world was ending, and then we said,
Yes, I do.
let's add an extension. Like, let's give all the countries around the world a deadline, and this is their chance to broker a deal. And if not, those tariff rates are gonna be hitting. So we got some countries that got a deal and others that didn't. So do you want to go through them?
Yeah, let's do
real
it.
quick? Okay. Here are the trading partners that we got agreements with them in the order of when they were announced. The first one was the UK. The tariff that was imposed on them on Liberation Day was 25%. They were able to strike a deal and get it back down to 10%. Vietnam on July 2nd, their rate was 46. They drop it down to 20 with a caveat about, goods that travel through their country, if you remember. And then we got Indonesia dropping on July 15th, dropping from 32% to 19. Philippines from 20% to 19 on the 22nd. On the 23rd, Japan dropping just like the UK from 25% to 15%. EU, a deal was made 30% to 15%, South Korea from 25% to 15%, and China, although talks are still ongoing, the current rate at which they are doing business with each other has dropped from 145 to 30%. So most countries are at 15%. And I don't think we're going to leave that. This is the new world. And China dropped from 145 to 30%. This is where we stay. At least now we know what the tariff number is, right? People were worrying about the formula that was used and what impact that would be. But if you now assume that your weighted tariff rate is going to be 15 to 17%, you can price that into tariff inflation impact, and you can calculate that into the formula of how much revenue will the federal government receive, etc., etc. So this is where we stand. Not panic. It is higher rate, of course, but it's not too panicky. Now, if we go to the countries that we still need to have a deal with, we have Canada, Mexico, India, and Australia. The tariff rate that is going to go into effect today, August 1st, because that's when the deadline is, and there is no agreement, is that Canada is going to get tariffed at 35%, Mexico at 30%, India at 25% plus an unspecified penalty. The president hinted at it in a press conference last week. There is going to be a penalty for doing business with China on India, but we haven't really got the details of it yet. And Australia at 10%. So it seems to be around like 30 to 35 for countries that we do not have a deal with, and around 15 to 20% for countries that we have a deal with. It's higher tariff overall, but it's not going to be as scary as we first thought it would be.
But also the precedent's been set with the countries we've already said with the deals in place, right? That we're placing that threatened tariff rate for Canada, Mexico, India, and Australia. Australia's 10%. I think that just probably shows that we don't care much because we don't do much trade with Australia. But the precedent's been set, right? That we're threatening that, knowing that we're trying to bring that down to probably around 15% for each, or in that range, right? Like I'd imagine those are the talks. And we're, again, you can see the proof in the data that, you look at, for example, as you said, Rabih, like even look at Vietnam. We threatened a 46% rate, and now we're down to 20. We threatened a 32% rate on Indonesia, now it's down to 19, so on and so forth. Even in the EU, we threatened a 30%, cut it in half. So I would imagine there's not much of a reason to believe we're not going to end up with a similar deal with Mexico and Canada and
Yeah, and just the fact that the US has made deals with those countries will influence the negotiation with the ones that remain. I think the most important part and why we would not like throw this tariff thing behind us is because in order of trading magnitude, our top trading partners are Canada, Mexico, then China, then the EU. So we are working something out with China and the EU, and then the UK and Japan after those. But the two largest trading partners of ours, Canada and Mexico, we still haven't struck a deal with them yet. Hopefully, like the talks are there. I think the cards are on the table from those sides, and it's a matter of hashing out the details.
Well, I think I just saw that something just popped up. Oh, they're stocks making the biggest moves midday. I think I just saw, was it yesterday, I think, Rabih, that Trump just announced he's actually extending the talks or the deadline with Mexico specifically to keep the talks going.
Yes, I think what they are at, instead of the 30%, they are at 25% for good faith, just because the talks have advanced.
Got it.
We'll see. It's been interesting. The tariff number is not the one like get it or die. It's not the hill they're trying to die at. A lot of countries are able to negotiate a lower tariff rate if they if they open their economy for American businesses more than they usually do. And that is actually the issue with India, mainly because India imports a lot from the US already. It's not like the US doesn't like it, but it's very hard for American businesses to go up and open in India. That's why if you go there, American brands aren't as available. They have, their own brands and their own successful businesses. And actually, the Indian stock market is one of the best performing stock markets for the last 15 years internationally, to the extent that it's always overvalued. Like when you do analysis on it, it's like it's overvalued. And it's what's been pushing emerging market indices up, especially when China was lagging. So India as an economy, they have these protections. They have got themselves doing really well. Their GDP per capita has been growing really quickly. But because they've been isolating themselves and giving themselves some competitive advantage, the US wants a piece of that. That's
Yeah.
type of this thing.
I would imagine, Rabih, by next week we'll have more data on the surplus and or deficit for July. We don't have that yet.
Hopefully I'll have it ready as soon as it pops up. I think we would like to watch this month by month just to see whether we're gonna be making the money or not.
Yeah.
We're financial planners and we're trying to be financial planners for the treasury.
For the economy.
Are you on budget?
Okay, that's great. I think that's a good update on tariffs. Final question here, final topic. Do you still need TSA PreCheck? This one hit home for me, Rabih, because it is one of the things I value the most underrated, things that I have is my TSA PreCheck. Do you have PreCheck?
I don't. I
No?
do not.
So you're just going in the general line when we travel together, and I'm going to make fun of you.
Yeah, I don't know. I never thought of getting TSA PreCheck. Before I became an American, TSA was not a fun, exciting activity for me. So I just wanted to get it out of the way, just saying.
Yeah.
But no, I never thought of it. Honestly, I want to say something about the Salt Lake Airport and how good it is. It is so new. It's so big so I've been living here for over 6 years. I never waited in line at TSA in Utah. It's usually like less than 7 minutes. That I never felt the need that I need to get TSA PreCheck. That's I think the main reason why I haven't gotten it yet.
I think that's a fair point because I think we take it very much for granted how incredible the airport is here. Because
Mhm.
I'm with you. Whenever I travel out of Salt Lake, it doesn't really, and we're going to get to this of why we're even talking about this. The biggest thing for me is I don't have to take my shoes off or take my computer out of my bag.
Okay.
And I really like that. It moves really quick. But I can totally see if you're traveling mostly out of Salt Lake, there's not much of a difference. They run that thing so efficiently. It is so well done. And it's one of the best airports I've ever been to.
It's
And you don't
yeah.
notice it until you get to other airports. I'm not going to call any cities out, Denver, like terrible. There are so many terrible airports out there that I travel to that I'm like, this is awful. I would never want to come back here. But again, it's because Salt Lake truly is, I think, one of the best airports in the country. So I can totally see what you're saying. But why? So why are we talking about this? TSA
Also,
just
it only applies in the country. Sorry to say that, but to interrupt you. Most of my traveling is probably Europe or back home in Lebanon, etc. There's nothing over there. You can't pay your way into comfort and luxury, so you
yeah,
have to go through it. So for me, it's only in Salt Lake, and it's good enough here. That has
yeah,
been my reasoning.
yeah. They have the version of the international, which is like the global entry. Coming back into the country makes it the makes it much easier. I don't have that, but yeah, you're right. Flying domestically, depending on the airport you're in, I have been to certain airports where TSA has literally saved me over an hour. Like you're looking at the line, and I walk around and go to the TSA line, and it's like no one's there. So why are we talking about this? TSA just released earlier in July. They will now let travelers keep their shoes on at airport security checkpoints. Kind of a big deal, Robbie.
You're not better than me anymore.
Apparently not. Apparently, I'm not better than you. I don't know what else. That's all I had on you. That's literally all I had on you. So this rule has been in place for nearly 20 years. They will no longer require you to take off your shoes. I think this is starting immediately. Yeah, immediate nationwide. So I think that's the only change they made as far as being able to come through. I think you still have to take your electronics out of bags when you go through, which again, TSA you don't have to. So the question is, do you still even need PreCheck? Experts came out and said they've done these reports that, and I'm going to keep mine. I still think it makes sense. The biggest thing they said was that almost all, so 99% of TSA PreCheck passengers wait less than 10% through secure. Sorry, 10%, 10 minutes. 99% wait less than 10 minutes at screening lanes.
Hmm. It's interesting that you'd still keep it just for the time saving aspect. I know it's
I think
important,
so.
especially. Okay.
Yeah, I mean, again, until they maybe make these benefits that TSA. So like the fact that I don't have to take my computer out, my bag is a big deal for me. Again, it's small. It's like a short commute, right? It's like an
Actually,
underrated
how
part.
much is TSA PreCheck? I don't
It's
know if
not
it's worth
bad.
the cost.
It's a bigger time. It's like I think the reason why people don't do it is because it does require you to like go to a center. You have to go fill out some stuff. They do an interview. You pay like I can't remember what it was, $75 or something.
Oh, that's nothing.
Which
Okay.
nothing. It might have been 100, whatever. But it's for 5 years. So
5 years for
yeah,
$100,
yeah,
$20 a year.
yep.
Dude,
And again, don't quote me on the price. I don't remember, but it's something pretty minimal. You have to fill out this thing. You got to wait a period of time, and then they get it to you. They give you a number, and I've loved it. So like I travel quite a bit throughout the year, especially domestically. And again, like we were saying, depending on the airport, I still think it's very much worth it. But I see this as a win across the board. You don't have to take your shoes off. That's a big deal. Maybe they'll get to a place where you don't have to take your computers out and make it just, maybe they just make it a kind of across the board a benefit where you don't even need TSA PreCheck. But as of now, I still think it's worth keeping. So, any other thoughts, Robbie? Have I convinced you thoroughly to go off and get it or no?
no.
Didn't do a
My
good enough sell
reasons are
job.
still the same. I still fly out of Salt Lake. It's a great airport, and I travel internationally most of the times. The only time I see a TSA is at Salt Lake. Probably not. I wonder, TSA is a private company, right? That is contracting with airports.
Yes.
I wonder
Yep.
why there's no competition. Because then prices will be even lower,
Yeah. Yeah.
or the benefits would be even better as long as they don't hinder security.
Yeah. Technically, there is a competition. There's Clear. So Clear is a competition to the TSA PreCheck. It's a privately held business where you pay memberships. Same thing. You walk through. They like scan your face. It's the same thing. So there are competitors, I would say. And I also just found here it is valid for 5 years. $85, $85 for enrollment and $70 for renewal.
That's less than one Chipotle meal if we want to talk in our currency, right?
I love that you just said that because I basically put everything in the version of or kind of I convert everything to Chipotle meals.
That's the currency. Yep.
That's the currency we talk about. So and a Clear Plus membership costs $209. So that is the competitor to TSA, I would say. So anyway, we just wanted to finish with that since we are in the middle of summer traveling. Congratulations to everyone. You don't have to take your shoes off. So one thing we wanted to mention that I brought up to our content marketing team, and they put me in my place because I was like, we should add this. And they're like, hey, idiot, we actually have this. So thank you, our marketing team, for letting me know. If you have a question, if you want to submit a question, and I'm not going to say to me, I'm going to say to Rabih that you want him to respond to and answer, we have a way to do that. If you go to dentistadvisors.com/podcast, you can easily submit an anonymous question. If there's something on your mind with what's happening in the economy or markets or anything, and you want us to address it here on 2 Cents, and when I say we, I mean Rabih, and I'll be here. We'd love to hear from you. So dentistadvisors.com/podcast, you can submit a question there. We'd love to hear from you. Rabih, as always, thanks for sharing your wisdom. Everyone, thank you for listening. That was our 2 Cents. Till next weekend. Bye-bye.